Well, hi, everybody. I trust you are all well. It's good to be back on the show. Good to be back live. Today, I'm feeling very bearish, and I'm going to tell you why. So here's just a bit of news first. You guys are tracking me. You know the 7 markets that we trade, that we look at on this show. Euro versus dollar, gold, Hang Seng 50, UK 100, S&P 500, Nikkei 225. And now we have Bitcoin. We have a cryptocurrency in. So I always want to only work on 7 markets because it's easier for the brain to process 7 bits of information. Speaking like a true NLP practitioner. So what I've done, I've been waiting for my broker to bring Bitcoin up onto the platform, and now they have. So I've dropped crude oil, and the reason I've dropped crude oil is that I haven't looked at the last 6 months. I haven't actually taken a lot of trades on Brent crude oil because I just haven't seen the setups that I like to trade. So it was an easy decision for me to drop Brent crude oil and bring Bitcoin in. So we're going to start talking about Bitcoin as one of the 7 markets that we trade. So we'll go into that as we get to it. So let's have a look and let me explain to you why I am bearish. Euro versus the dollar, let's start there. Put up the daily chart. Okay. Now, key level of resistance. Okay, micro double top here, and we bounced off that a couple of days ago. So my thinking is that the bears who have managed to turn the market twice, but we'll talk about what happened a little bit earlier here as well. So we can understand the thinking and the build-up to be bearish on euro. My thing is that the bears have got a lot of strength, and they're going to attempt to push the market down. Now, what might transpire on the daily time frame, if I'm correct, 60% of the times I always am, is that we'll have a bear breakout, might have a bit of a pullback, we might get a lower high. So if you trade in the daily, you have to probably decide to wait for the lower high to go short. But because we trade in a lower time frame chart, we want to look for those early entries into this possible reversal into a bear trend. That's that R2.3 strategy that really gives us huge opportunities to extract wealth out of the market. Now, why is this level of resistance key? 1.148 area. See that micro double top? You see the test of that as well. But when we're talking way back, we spoke about this trading range, attempt to break out, and it failed. But have a look at this. So have a look at what happened here on the left-hand side. We had a trading range here. I'm just going to mark it for you. That trading range. Okay, so with another trading range, a breakout created a trading range. The bears at that point, which was in November, strong bear breakout beneath that trading range and follow through. So with the breakout and the follow through and confirmation that the bears were strong, bit of a pause, and that carried on. Now, the bulls, if the bulls are strong, they want to reverse all of this price action. But the bears are defending the breakout, which is what they've done. And that's why this level is a pretty strong level. So we love it. So now on the 5-minute time frame, I am looking for shorts. Okay, I'm not trading the daily. If I was trading the daily, I want to see a bit of a breakout, pull back, lower high. But I'm very happy to go in and start looking for shorts on the daily time frame. Sorry, on the 5 minutes. So here we are on the 5 minutes. And I am looking for ways to get short. Now, you're looking for ways to get short. You gotta be smart about it. You don't just jump in when you see a bear candle because you're gonna get stopped out. You only want to get stopped out when you've taken a trade when things have set up. okay? Because that's perfectly fine. You know, we do get stopped out 40% of the time, 60% it goes our way. So what I'm looking for now is within the current daily price action. What I want to see is if the market will come back and bounce off this or even attempt to break out and fail. You will see this level here, this 50% level. It's the midpoint of yesterday's range. Green line, high of yesterday. Red line, low of yesterday, midpoint. So that's a magnet. Okay, the midpoint of any trading range, whether it's yesterday's trading range, or even if it's just a one bar doji that you are tracking as a trading range, the midpoint is a magnet that the market gets pulled to. So you don't want to take trades at the midpoint, because where do you put your stop? You're going to put your stop up here or a stop down here. So let's wait. What I'm waiting for is a bit of a trading range being created. There is a high, there is a low. If you're looking to sell, I mean, your thought process is got to be you want to sell as high as possible. Okay, you don't want to sell in the middle and have a wide stop. Sell as high as possible, and then go back into the range, and hopefully, you know, the bears will be strong to accelerate past that midpoint, and if the trend kicks in, break beneath that. So patience is the name of the game, but we are stalking, we are hunting, we are waiting. Okay, that's not very straight because, okay, so if the bulls break out above that, I'm a happy chappy. I'm not changing my mind to go long because of where I started explaining to you, very focused on going short. I want to see the bulls break above that. I want to see them try and take that out. We may have a double top here and the lower high. I'll jump in, or even if they break above that, that is the measured move of that trading range, that pullback. So if the bulls break above that, they want to get here. So in this area, I'm going to be looking to go short if it sets up. Okay, if it sets up, it could be double top, lower high, whatever. Might have a wedge pattern, 3 pushes up, 1, 2, 3, and the reversal. That's the area I'm going to be looking to go short. So focused to go short. I'm going to wait. When it comes, I'm going to jump in. If you got questions, just pop them in the question box, in the chat box. Gold. Again, this guy's looking to sell. Now, we've spoken about gold many, many times. So that's a daily. We spoke about this descent in trend line. You know, start off there, touch there, touch there. So bears are pretty strong. Bears want to defend that. You can leave it there or you can put it there. Doesn't matter if we get above it. So if we get to this level, that's a nice place to sell if we haven't did a setup. I mean, have a look at what's happening with the bulls. Would you be jumping into this market to buy? Are you going to be saying, oh my goodness, look at how strong the bulls are. Let me jump in and buy. Just by looking at the price action, nothing in this market that's going up is convincing for you to jump in and take a trade. Firstly, you are in the midpoint of this breakout. That's the middle part of it almost. If you take a buy trade on the daily, where are you going to put your stop? You have to put your stop at the correct place at the bottom here. Why do that? Okay. So the bias, because of the strength of the bears, is bearish. So I am looking to go short. But what I need to see now is a dissipation of the strength of the bulls. Still bullish, but I want to see a failure setup. Okay. And I'm very willing to go into the 5-minute time frame and have a look and see if it fails here today, I'm going to jump in. If it doesn't and we have another bullish candle, fantastic. I know we are in a sell zone. This whole area is in a sell zone, the market is going to create a lower high. And what I'm trading, what I'm looking for, when I'm looking for in this point, when I'm looking for the shorts, is that strategy that I've spoken about, the R2.3 reversal into 2 to 3 day trends. That's what you want to get. You want to be able to stay in the market. And if we catch a trade somewhere within here and we get a reversal into 2 or 3 days, I mean, what a beauty. You just have to trade once. You know, it may get stopped out a couple of times. They're fantastic. But if you get in, your rewards are going to be magnificent off that first trade. But still in the day, there's going to be a lot of pullbacks that you can just jump in and keep taking your profits. Okay, so that's what I am looking for, a reversal into 2 to 3 day strategies. That's what I'm searching for. So again, very short bias. That is what I am looking for. Get down to the 5-minute time frame. Okay, again, high of yesterday. So by now, guys, these are some of the basics that you just put on your time frame. Have a look at the daily, you know, get your thoughts where you want to go, then say, okay, what happened yesterday? High of yesterday, low of yesterday, full trading range, 50% pullback. Okay, so because I'm still looking for trying to get into that early reversal into a 2 to 3 day strategy, the R2.3 strategy, which big wealth extraction. Keeping my eye on it. So going sideways up, I have no problem with that. But have a look at this. I'm not jumping into anything at this moment. Okay. If we get back up here and we get a double top and we get a clean lower high, happy to take the trade. But at this moment, I'm maintaining my bias. I got to wait to see if we get back here and all of a sudden there's 2 or 3 strong bulls, or we just get another trading range being formed here, perfectly fine. Just means today I didn't get the entry, but I'm not changing my bias because we are in a sell zone on gold on the daily. This is a whole sell zone. We're looking for that lower high and we're trying to get in. Now, let me just give you an example. So I spoke about that. You know, you don't want to, well, let me say you don't want to. You can, after you've seen that, quite legitimately say, okay, big bear candle on the daily. Let me go find entries for trend continuation. And you'll find beautiful entries, extract a ton of wealth. But the other 2.3 strategies we're trying to get in at this stage where we're seeing bull candles, but we know we're in a sell zone. We want to just get there early. Have a look at this. You know, if you had been analyzing this and saying, okay, market went up, came down, failed, that's a bit of a wedge pattern. I know that might fail. I'm trying to find the reversal into a strategy. And you jumped in that, you would have jumped into the trade before anyone else sees it and taken the trade. So that's what we're looking for. That's the mindset that we have. We can clearly see. Okay, I keep saying clearly see. This is when you must just say, hey, George, you can clearly see. Can you tell us what this clearly sees? Look at this bear breakout. One thing you can do when you see something like this, okay, I've just clicked on my Fibonacci retracement. And I've set it up and I showed you guys I will set it up and I can go through it again. If you just look at the bodies that the bear is controlled, mark it from there right to the top of that candle. Okay, so that's the height of the bear, of the bodies the bear is controlled. I'm going to change the color here so that you can see it. So let's put in red. Okay, so there's a red line, and let's just go to fib levels. Let's mark it in red as well. Okay, so the midpoint of the market when the bears were in control, those big bear bodies, just marking the bodies where they're full in charge, the midpoint is there. So the market is bulls tried to break above it, and then with a bull candle, but look at the tails on top, not convincing. The bulls were strong. We should have had this candle closing on or above is high. Okay. Now, if the bulls, if our case is correct and we're arguing that the bears are strong, we look back to the left. What happened with this bear candle, that reversal? At that point, if that, before that had formed, you would have been saying, hang on a second, we had a bull breakout, okay, it failed, but we had a higher low and we've had a follow through. So at that point, before this formed, you'd be saying, okay, if the bulls are strong, they must just give us another candle to confirm that higher low. So at that point, the higher low was pretty significant, right? But immediately at the reversal that took out that higher low, not only did we take it out, we closed beneath it and beneath all the moving averages. So that breakout point is likely to get tested. And that is what is being tested to see if the bears were able to create that reversal beneath that higher low, are strong enough to defend it. And that's what I'm looking at. My whole thesis is that with this reversal, the bears are strong enough. Now, when you are trading this reversal pattern at 2.3, your probabilities are switched. Okay, remember our traders equation, risk, reward, and probabilities. We know how to manage our risk. We decide how much of our equity we risk on a trade. We know how to manage the reward. Where do I take my profits? But when you click that button and you say, boom, get me into the trade, Mr. or Mrs. Broker, you have absolutely no idea how the random distribution of trades is going to occur. Okay, so your mind has to be prepared for that. When you are trading a reversal into 2 or 3 day strategies where you're trying to get these trades that are just going to give you this incredible extraction of wealth from the market, it's a reversal trade, which means that the probabilities are stacked up against you. So we're only going to win 40% of the times. Out of 10 trades, we're gonna win only 4 out of 10. We'll lose 6. If we manage them, we should be breaking even. But if we don't, we know that 4 trades we're going to lose and get stopped out, which is perfectly fine because the trader's equation will still work in our favor, because when we win the 40%, we lose 60%. When we win the 40%, we're not going to be making 2-1 or 3-1. We just want to get 5-1 and want to bring our money management in. And when our equity grows, you want to stake up and build our position. So that's perfectly fine. And once we are in that trade, then we're looking for pullbacks, right? In that trade, the probabilities change. Now we have a higher probability of success. We now can expect to win 60% of the times. If you win a lot more than you lose, you're not going to be waiting, say, hey, I got a 60% win, I'm going to wait to see if I get 4 or 5-1. That's not going to happen. You then take your profits earlier, 1-1, 1.5-1, 2-1. So we need to always understand the trader's equation, and especially random distribution of trades. Okay, so you don't panic if you're losing. You just know, okay, this particular trade, this is it. If you're not comfortable with losing 40% of the time and getting big winners, don't trade reversal trades. Okay, don't trade there. Don't try and trade there. Okay, wait to see. Okay, we are now got a bears in control, broken beneath that higher low, closed beneath the moving average. I can go into the market and get a trade and know that there's a 60% chance there'll be trend continuation. Take those trades. Okay, just trade at peace. Okay, so that's the thought process that we presently have. Gold. Let me just clean up my charts a little bit. Told you guys, I think I told some of the guys, you know, as a private pilot flying light aircraft, I remember my instructor, one of my instructors, man, he drilled into me just how to be neat as a pilot, you know, because you're flying, you got your charts, you got your maps, you got all of these things, and you're still learning, and you're like, oh my goodness. But when you land, you just say, okay, George, I'll see you back in the office. Clean up your aeroplane. Keep it clean. Just declutter the whole thing and pack everything up. So it's the same thing when you're trading price action. You know, you need to keep clean charts so that you can see what is happening. Hang Seng 50. Bearish again. I'm looking to sell. Okay. Logic is pretty much almost the same. I guess you could argue to say, George, why are you looking to sell? Well, here's why I'm looking to sell. Okay. So have a quick look. So anyway, just always, in case you see these lines and wonder what's happening, this is the low of yesterday, the red line. That's the high of yesterday. That's the green line. Okay, the magenta line is the open of the day. So I always have that plugged into the market. So I'm looking for a lower high on the daily, early entry into the day. But you can say, but hang on, buddy, you're seeing all of these green candles. Why are you even thinking of going short? Okay, yeah, I can see that level of resistance there where the market turned, but why are you doing it here? Well, here's why we're doing it. Whenever you see a gap in the market, you always must think that 90% of all gaps get closed. The market never leaves a gap perpetually open. So at some point, that gap is going to be closed. Okay, so we just keep that at the back of our mind. But let's have a look at what's actually happening here. So we had a gap up after the holiday season. Market gapped up, and we kind of know at the back of our mind at some point that gap will be closed at some point. We then had a follow-through candle, which is an inside candle. Okay, so this beautiful bull candle, follow-through candle, fantastic. Inside candle is breakout mode, which we expect to happen in the direction of the bar, okay, of the body. The body is green, bullish, so we expect breakout. But what happened was we had an attempt by the bears to break beneath that inside candle, okay, and created a double bottom here. Now, by the time the day ended, the bears pressure, the bear strength had been completely reversed, and we ended up with an outside candle. Good for the bulls. Inside candle is breakout mode. Outside candle is a large trading range. Okay, so we have an inside candle breakout mode, we have an outside candle, which is a large trading range. And whenever you see a trading range, you expect that most breakouts of a trading range fail. We know that. Look at all the trading ranges you've ever looked at. Most trading range breakouts fail. Okay, so we're expecting this to fail because it's a breakout out of a trading range. It's a large trading range. So I'm expecting that to fail at some point. Where will it fail? Well, the bulls might want to accelerate and test that, but I'm expecting a failure anywhere within this. And so it's a failed breakout that I'm looking for. And when that begins to fail, I want to be able to get into that trade and see if we can ride it as it goes back into the trading range and get to the bottom of the trading range. When it gets to the bottom of the trading range, again, you're going to be managing your trade, because then you're expecting the bears, because bottom of the trading range, bears would want to break beneath that trading range, close the gap to show their strength. Bulls would want that to fail. So that we can manage as we go through there. But at the present moment, I'm looking for a failed breakout of this pattern, which will then create a lower high. And out of this big trading range, we come back into the trading range. So back to the 5-minute chart. High of yesterday, low of yesterday, 50% pullback. Now, when you see this attempt to break out above the high of yesterday, with the mindset that we're coming from, that outside candle that is yesterday is just a large trading range and most breakouts fail. So the pattern that you see does not surprise you at this moment. So having looked at that, we are waiting. Now I'm waiting to see if I can get a tradable setup. There's a double top, Okay, the market opened up again here with a gap up. This is a classic little example of when we say that most gaps close, you will see there's a 90% chance that this gap is going to close sometime in this session. If it does, we have a double top that has been created. Okay, and when we have a double top that's been created, we want to see the price action coming off the double top. You want to see that this double top, the forces that have created the double top, result in the bears giving us a close, a couple of candles closing beneath the rising moving average. So I want to see a couple of strong bear candles, which is confirmation of this double top. Then I'm like, yippee, happy days. And like here, for example, that's a nice close. Okay, close beneath moving average, follow through. So I want to see strong bear candles down here. Then after I've seen that, I have my setup. I'm just want to wait for the signal, and the signal then will be a lower high. So it could be like this. If I got a couple of candles, strong candles closing on near the low, confirming the strength of the bears, then I want to see a bit of a resumption of the trade, of the bulls trying to resume. Then I want to see the bears saying lower high. Then I'm jumping into the trade, decide where I put my stop. Then I'm going to just hold it and manage it and see if we get an acceleration down back into the trading range. And let's see how far it goes. So this is setting up pretty nicely, but we are going towards. Now, here's another thing which we've spoken about before. So I'm expecting to have a couple of bear candles to confirm the strength of the bears. But what if I have the market, the bulls resuming the trend right here? Remember, always I put my measured moves in. Okay, so this double top here, if the market turns here and breaks above that, I'm expecting that the bulls want to do a measured move of this trading range right up to here. And if they do that, I now have a wedge pattern, a variation of a wedge. Remember, 3 push forces are very strong in the market to give you indications of when to jump in. So that would be first push, second push. A failed breakout above the trading range is a third push, so it's a variational form of a wedge. Then I'll still look for my my lower high. Okay, let me just check out the questions. Yes, you have to be watching the chart for the lower high to form. Yes, certainly, Gary. That's 100%. So when it kind of does this, yes, I've spoken of separation. I was trying to think when I spoke of separation. I don't know if I've spoken of it this year, but when I see a setup like that, okay, if the market immediately gives me a lower high, for example, that I'm not trading that. Okay, so you have to train your mind. Okay, there's a double top. I want to see a close beneath the moving average, strong candle, a couple of strong candles. And then thereafter, I want to see the lower high, but the lower high has to come with a bit of separation. In other words, I kind of look for like 6 candles, plus or minus 6 candles, which on the 5-minute is 30 minutes. So from here, I could ignore this this chart here for an hour, literally, because I want to see those couple of candles. So let's say I get this candle and the next candle, so that 5, 10, 15 minutes gone. Then I want to see a resumption, which has to be at least 6 candles separation from when it's turned. So that's another 45 minutes. I want to see the lower high. So that's almost like an hour. And even if it breaks above that, it's going to take 6 candles, then a lower high setting up. So, I mean, you literally can just say, okay, I'll be back at past and see what we have. And chances are it will set up nicely. If you have missed that lower high, and here's the point, we're trying to get this lower high for that first entry into our RR2.3 reversal into 2 to 3 day strategy. That's why we're trying to do, so that we can then capture this whole move. But if you miss it, You got to come back and say, there was a lower high that formed. After that lower high was formed, can I see the bears accelerating the trend? Because you'll be able to see the 2-3 bear candles, and then now you're looking for a pullback to your moving average, your 10 EMA, which is a beaut, because now you've shifted from this 40% chance of success by trying to take that early reversal trade. Now when you're taking pullbacks, because 60% probability, so you just wait for a clean pullback to your EMA, take your trade, go for a one-to-one, bank it, wait for another pullback, and just keep going like that. So if you miss the reversal trade, and if it sets up, beautiful. Just wait now for the pullbacks. So the opportunities will be plenty. So we're just gonna leave this and pop in and see later on if we get our setup. But again, we are very bearish. Okay, 100. Okay, so let me just, this is pretty classic in terms of what we're talking about. So that's a lot more near-term excitement. Double top, micro double top, market tried to break above that, failed, so turned. Okay, the bulls attempted to resume, but have a look at all this price action here. This was yesterday, Monday, look at last week. Okay, tails on top, bulls trying to make their way, failing. Doji, okay, that's a trading range, almost inside candle. We know inside candle is a breakout mode. Bulls had a chance to break out above that and give us a new high, failed. Okay, double top, that's exactly where we are. And this is where we are today, micro double top coming off that. So I'm very bearish on this. So now I'm just trying to find ways to get into this market, okay? Because everything is showing me that the bulls are failing, that the bears are taking control of the market. But I want to try and get in early so that if whatever happens with this day, if it ends up as a bear reversal candle, let's say something like that, okay, I want to see if I can get in early into that trade. And then, if the bears are successful, they haven't created that, then we're now into trend continuation, then I can look for other entries. So as it is right now, just bear in mind what we're talking about. There is our double top. Okay, so pretty neat, high of yesterday, low of yesterday, midpoint. So there is a double top. Okay, when you see a double top, which is what we're talking about just now, you want to wait to see confirmation that the bears who have created that double top are actually taking control of the market. You want to see those couple of bear candles. So that's one, okay, not as neat as you want, but it's a bear candle. You want it to close beneath all of these lows. We get a follow through, fantastic. We get another follow through candle, fantastic. A follow through candle could be a big candle, small candle, but you want to see the fuller body. So when I see that, I'm a happy chappy. Now I'm saying all I want to see. I'm not going to trade in the middle of the trading range because this is a trading range. Okay, all I want to see is the bulls attempt to resume the trend. Okay, the bulls who created this, let's see if they attempt to resume that. And somewhere within here, I'm going to be looking for a lower high. Okay, there's no point trading because you can't ignore that trading range, although setting up nicely in terms of what we're looking for. I've seen that now, and now I'm just waiting for my candle separation. So I can just wait, come back in 30 minutes. If it continues to go down, that's not the trade I'm looking for because now we're just in a huge trading range. Big down, big up, big down. So we're just going to carry on, which is no problem, but I'm not trading range. I'm just looking and say, come on, bulls, get back in the market, give us the reversal, trying to attempt to get back here, and let's see if the bears will repulse you, give us a lower high anywhere near, and we are jumping in. That's not the lower high I would trade. The reason I wouldn't trade that is I haven't seen after this double top confirmation that the bears are in control of the market by giving me at least 2 successive candles. Okay, so this is good news, but it's good news that's now saying to me, okay, just wait patiently. Let's wait to get a lower high and jump into the trade. If we don't get it, we'll let it come down here. Let's see if it bounces and come back. If it doesn't bounce and if it accelerates beneath that, then, oh, okay, bears and control. Now we're going to have to wait for a pullback and the whole cycle starts again. But this is near term, looking for opportunities. So happy days with that. S&P 500. Again, bearish. There is a breakout by the bears. Market is testing that. Okay, breakout, you can see that beneath that pattern, there was follow through. And beneath all of that span, there was even follow through. So the bears have been very strong. And now we have a pullback, which is just going back to test almost a half of that bear trend. Happy days. So now we're trying to see ways to jump into the market at this particular point. So if you want to put that in there, you can do that. But we're looking for failure, so we can jump into the trade, whether we get it today, big bull candle and the reversal, or whether it comes in the next day. But we are bearish. We're hoping that the market bounces off that inside candle breakout mode in the direction of the body. Bears tried to break out, failed, and came out to give it an outside candle that we've got. So again, this is a tight trading range, inside, outside, and most breakouts above trading ranges fail. So you see, as a price action trader, you just talk to yourself all day. Most breakouts fail. Continue to talk to yourself. And that's the beauty of it. You know, these things just continue to ring. So most breakouts fail. So if you trade in the daily, don't bother jumping into this, you know, because you know it's likely to fail. So why put yourself through the agony? Just wait for it and see if we can get our entry into the trade. Down to the 5 minutes. High of yesterday, low of yesterday, 50% pullback. Now we're just waiting for this thing to set up and see if we can get an opportunity. So here's something you could have done, which you must do until you get familiar with these things. There's a high, there's a low so far. Attempt by the bulls to break out above that high, poor follow through. So that's good for your case. So that's the larger trading range, that high and that low. So it just says to you, you know, if the bulls are strong, they might still have acceleration to come off that. Perfectly fine. We are tracking the trade. We're trying to see if we can get in and get that reverse into 2 to 3 days trend. The trading range here. And if you get bull acceleration out of that, the height of that trading range, so things are beginning to stack up that, you know, we might be able to get an opportunity to bounce off here. Now, the question you may ask is, why wouldn't you have taken a trade within here? Well, you could have taken that trade. You know, you want to get your 1-to-1, 2-to-1 out of the market. Absolutely fantastic. But I don't want to get myself distracted. I want to wait to get into what I think is going to set up. And if I get in there, man, for a busy period, 2, 3, 4 days, I'm just going to be reaping the rewards. So rather wait for that than in and out, and clutter my thinking. Okay. So no surprise here. Big back bull candle. If bulls were strong, they would have given us another successive bull candle of that caliber. But that failure indicates that these bears are selling in the market. The big, strong bears are beginning to sell in the market. So for us, this is happy days. Okay. And the beauty of the S&P 500, if you trade in it, man, there's just so much volume washing through the day, and in the afternoon, the US markets are going to be jumping in. There's just a lot more volume. So don't be surprised if, you know, if we have a breakout here and then it bounce, then we're going to look for the short. So bear that in mind, very bearish. Nikkei, you kind of know the process now on the daily. Again, we're looking to go short. And the reasoning and the rationale is all of this stuff here, just trying to break out of a tight trading range, testing the breakout. So no reason to be going long at all, okay? Let me be careful. There is a reason to be going long and short at any time. At any time, you can come in and just say, I'm going to go long, put my stop, take out 1 to 1.5% for the market. You can go long and short at any time. But based on the strategies we are trading that we share on this particular show, we're not going to be doing that, because if you're trading this on the daily, you don't want to be going long anywhere within here. You want to be thinking short. And if you're thinking short here, then on our trading time frame, the 5-minute time frame, we are looking to go short. And that's the beauty. We saw that level failing to break out above that. So that we like very much. Now, here's one thing as well that I do with these markets. There is some level of decision making you have to make about which one are you going to trade. So I find if I go the Nikkei 225 and the S&P 500, they're all kind of setting up. I've got to choose which one I'm going to focus on. I don't want to jump into both of them at the same time, because sometimes they may be setting up both, and I want to just focus on one and rather be managing my trades in one, increasing my risk in one, protecting my profits, adding more into one, than to be saying, okay, I've banked 1% here or 2%, let me take another trade on the Nikkei. My brain just can't work with all those multiple scenarios. So I tend to make a choice. Euro and gold, I tend to choose one of them. Out of the indexes, S&P and Nikkei, I tend to choose one of them. Hang Seng tends to stand up on its own, and I'm comfortable with the UK 100 on its own. Bitcoin has just come up to replace crude oil. So just bear that in mind. You don't want to be in all 7 at the same time. So you might end up being in 2 or 3 and just work those. Even if those something else sets up, just work those that you have thoroughly. Okay, Nikkei 225, we're trying to find ways to go short. There is a double top. Market is going sideways here. Now, good point. We mentioned earlier that when I see a double top, I want to see a couple of strong bear candles to confirm that the bears have controlled the market, then a resumption, then a lower high. The other scenario that shows you that the bears have taken market is indecision at that point. So we have a double top. We are not seeing consecutive bear candles coming into the market. We're not seeing the bulls breaking up above it. But as the market continues to go sideways, it's more indecision. So the chances of breakout, bull or bearish, becomes equal, which is perfectly fine, because then you just want to wait, no matter how far we go, for any breakout. And we know a breakout is likely to fail. So if we get the bulls breaking out above that, we look for the failure. Then we want to try and take it back into the marketplace. Finally, new baby on the market is, for me, Bitcoin. Okay, I'm looking to go short on Bitcoin. I was laughing at some of my friends. They're into Bitcoin and wallets and I don't know, whatever things that these clever guys do. And they're all saying, oh man, I'm going to double my wealth. I'm like, where did you buy it? Oh, they give me, I bought it at 40,000, whatever. And it's going to double. I'm like, oh, okay. That's pretty interesting. I don't have a wallet. I just don't know how it works. I just look at the price action. And they were not too happy with me when I'm saying I'm looking to go short, looking to sell Bitcoin. Well, I am looking to sell Bitcoin. Bulls are failing to break out above this level. Okay, they had an opportunity. The market is open over the weekends. So, on TradeView, that's a bit of, I think it was a bear candle, which again is a bit of a concern for the bulls. If you're strong, you want to put successive bull candles, give us a pullback to the EMA and keep going long. but we're not seeing that at the particular moment. Failure at this level, which is also the bears defending the breakout beneath this point here. So I am looking for ways to short this market. So guys, as we come into the close, to be interesting when we chat next week, how this all panned out. But again, just quick last one, where am I going to short Bitcoin? The market has to come back here. Okay, I'm not going to short in the middle of that range. There's midpoint of yesterday. So I come back here, test, and give me an opportunity to go short. All right, guys, it is time. Thank you for being present and popping in questions. We will see you next week. Thank you very much. Thank you guys in the office. Appreciate your time.